Afternoon. Welcome to this special session with our Minister of Finance, Yang Berhormat Senator Tengku Datuk Seri Utama Zafrul Tengku Abdul-Aziz. 2020 has indeed been an unprecedented year. The COVID-19 pandemic caught the world off guard. Now, 1 year down the road, the global community is still struggling to contain the pandemic. It is a pandemic that is threatening human lives. To date, the number of COVID cases worldwide has surpassed 100 million, with more than 2 million fatalities. The numbers keep increasing, with some 700,000 new cases and 10,000 deaths being reported daily. Closer to home, we have seen more than 200,000 cases and more than 700 deaths to date. With daily new cases hitting the 5,000 mark, it is beginning to stretch the healthcare system. To make matters worse, reports of new COVID-19 variants in the UK and elsewhere are making vaccine development even more challenging. This pandemic is equally damaging to people's livelihoods. With national lockdowns, restricted movement controls, and travel bans, the global economy is estimated to have contracted by 4% in 2020. Malaysia is obviously not spared, with GDP contracting 6.4% in the first 3 quarters of 2020, resulting in reduced employment and business opportunities. World leaders, top scientists, and the medical profession all have their hands full trying to save lives. And likewise, businesses, corporations, and financial leaders are struggling to ensure companies are able to weather this economic storm brought about by this pandemic, keeping viable businesses afloat and people employed. Without doubt, we are facing one of the toughest challenges in modern history. Ladies and gentlemen, I am pleased that our Minister of Finance, Yang Berhormat Senator Tengku Datuk Seri Utama Zafrul Tengku Abdul-Aziz, has kindly agreed to share his thoughts on what he and the Government of Malaysia are doing to help our economy recover from this pandemic. Yang Berhormat Tengku will speak for about half an hour, followed by a Q&A session. Over to you, Yang Berhormat Tengku.
Yang berbahagia Tan Sri Abdul Wahid Omar, Chairman Bursa Malaysia. Ladies and gentlemen and esteemed guests, fellow Malaysians watching wherever you are, a very good afternoon to everyone. Firstly, thank you for making time to join this session today, and many thanks to Bursa Malaysia for making this happen. Since my appointment as Finance Minister, I have been engaging with various organizations and media outlets, both domestic and international. In more forward-looking discussions, we talk of what it means for Malaysia in rebuilding her economy, not just merely reconstructing, but building it to be better than what was before. Throughout this COVID-19 pandemic, leaders all over the world talk about the need for their people to set aside differences, do their part, and unite in the face of this ongoing threat. In Malaysia, we witness the rise of hashtags like Kita Jaga Kita or Menang Bersama. The pandemic has certainly tested our ideals of normality, of public life, and social togetherness. The COVID-19 pandemic has been the definitive global theme in 2020, causing most governments to deal with both public health and economic crisis at the same time. According to the International Monetary Fund, IMF, the global economy contracted by 3.5% in 2020, with an estimated loss of $22 trillion from 2020 to 2025. More worryingly, approximately 90 million people are expected to enter extreme poverty by end of this year, reversing growth trends seen over the past 2 decades. This will increase inequality in many countries, with the risk of uneven recovery or perhaps even a K-shaped recovery. Recently, the World Economic Forum said that the contraction in growth for 2020 is estimated to have wiped out 495 million jobs, or at least 14% of the world's entire workforce. As a result, governments globally poured in approximately $14 trillion to save lives and livelihood, protecting jobs, businesses, as well as people's means to earn a living. This has led to an increase in global public debt, which is estimated to reach 100% of GDP in 2020. My fellow Malaysians, it has been a year since this nation and the world started experiencing this unprecedented pandemic, at least in recent history. Many uncertainties still linger. When will the pandemic end? How can we expedite herd immunity? Why is today's lockdown not as stringent as the one we had in March 2020? And in terms of the economy, where do we go from here? The impact of this pandemic is beyond anything we talked about a year ago. Although with the impending vaccine arrival, we can see a glimmer of light at the end of the COVID tunnel, we have still some ways to go in dealing with the full extent of its impact. Amidst the sea of unknowns, there are a few facts that we know. Firstly, we can anticipate between 3.5 to 5.5% contraction in growth in 2020, whereas the IMF recently revised our contraction by 20 basis points from 6% in October to 5.8% in late December last year. Nonetheless, these are better than the UK at -10%, Philippines at -8.3%, India at -8%, EU at -7.2%, Thailand at -7.1%, and Singapore at -6%. Secondly, we have successfully limited Malaysia's case fatality ratio at 0.4%, or within the 5% lowest globally. Our public institutions and healthcare system have worked effectively and constructively together, which is acknowledged by Moody's recent announcement, as well as the IMF during the Article 4 mission last December. Thirdly, the government's financial standing remains strong and have been used to good effect to cushion the shock. Fitch, in their recent report, agreed that our deficit targets of 6% in 2020 and 5.4% this year are realistic and achievable. These are better than IMF's estimation of 10.3% deficit that will be experienced by emerging market economies. Despite our fiscal deficit, the additional spending via our economic stimulus packages in 2020 is a testament to the government's priority when it comes to the people. So far, the stimulus packages have benefited 20 million individuals and 2.4 million businesses, with more than 50% of the initiatives delivered to date. Out of this, the bulk of disbursement include the immediate relief measures, such as the cash aid measure like Bantuan Prihatin Nasional, the Grant Khas Prihatin, wage subsidies, and other such measures to protect the rakyat's livelihood and ensure the continuity of businesses. This is expected to add up to 4 percentage points to growth in 2020. Fourth, investors' confidence continued to be reflected in our capital and financial markets, which showed encouraging performance under an extremely challenging 2020. Last year, Bursa Malaysia was the best performing within the region, with returns of 2.4%. Including dividends, investors saw total returns of 5.8%. Average daily trading value also reached a high of 4.2 billion ringgit. The higher participation of retail investors saw a marked increase from a close to a quarter, or negative 24.5% in 2019, to more than a third, 37.7% in 2020. At the same time, foreign shareholdings in our stock market remained at a healthy level of 21%. Additionally, the Malaysian ringgit was one of the top performers in the region, with 1.7% increase against the US dollar. This was partly contributed by the recovery in prices of commodities, as well as the positive non-resident inflows of 18.3 billion ringgit in our bond market. Our foreign holdings also remained stable, accounting for an average of 22.8% of domestic government debt relative to 22.4% in the year before. Fifth, our banks, supported by their sound capital buffers, years of prudent lending practice, and sound risk management policies are poised to assist people and businesses to manage borrowings. In 2020, we saw 7.7 million individuals and more than 240,000 businesses benefiting from the assistance either through loan moratoriums or restructuring. Various forms of repayment assistance continue to be offered. To date, more than 1.3 million borrowers have applied and received such assistance, with an approval rate of 95% for individual borrowers and 99% for SME borrowers. Finally, and perhaps most importantly, everyone can see that it is not just the government, but also the many Malaysians and the private sector that have stepped up to responsibly comply with public health measures. Admittedly, as a nation, we have had our challenges and setbacks, but we also have a lot to be thankful for. In times of darkness, let our fighting spirit be the beacons lighting our forward path, so we can win this COVID-19 war together. This is exemplified in concerned individuals, civil society organizations, and NGOs all over the country joining hands, helping fellow Malaysians impacted by the pandemic, whether through supply of PPEs or in delivering food and supplies to the displaced and dispossessed during lockdowns or when the floods hit. This was also evident from my recent visit to various districts in Pahang over the weekend. The plight of flood victims has been alleviated by the actions of kind-hearted fellow Malaysians and proactive NGOs. For that, we thank you. Surely, we cannot successfully rebuild the nation and economy if the government were to work at it alone. Yet, we must remain vigilant of the unscrupulous few that seek to take advantage of the situation. These are emerging issues that require our immediate attention. The rise in scams, hacking, fake news, and misinformation that is meant to break up our cooperative spirit. Let us not fall prey to these attempts that seek to undermine, derail, distract our efforts to heal the nation and our economy. These are not our brightest of days, but I strongly believe we will get through it and see better times, recovering faster and in a more sustainable way. From the time we realized the gravity of this pandemic, this government also realized that there is no single solution in winning the COVID-19 war. Hence, today, I would like to explain where we are in this pandemic and what the government has done and is planning to do in protecting the people and limit further socio-economic fallout. We had all been through a full lockdown or MCO 1.0 in March 2020, among the strictest according to global studies. We knew it cost the economy 2.4 billion ringgit per day, and not to mention the mental and emotional stress of millions of people being confined in their homes for long periods of time. Even domestic violence and child abuse cases had been shown to have increased during lockdowns. It has also led to an unemployment rate of 5.3% in May. As a result, our second quarter GDP for 2020 contracted by 17.2%, the worst amongst ASEAN nations. For the government to decide on the exact nature of a lockdown is never easy. Currently, there has been plenty of debate on whether our country should go into a full lockdown. Those in favor of raising the level of restrictions argue that we should, because we want to break the spread of transmission and save more lives. On the other hand, those against further restrictions argue that the economic harm from a stricter lockdown outweigh the benefits of slowing the spread of the virus. It has been highly challenging to balance the safety of people's lives and the security of their livelihoods. It involves many factors, requiring careful deliberation and thought, and constant review as the situation evolves. We must also realize that there are harms that may be difficult to predict. The economy does not operate on a flick of a switch. There is no turning it off and then turn it back on as we see fit. Livelihoods depend on it. On this note, we must look at this issue squarely in the face and ask ourselves with honesty, what is the real impact of our losses if we had strict lockdown this time around? It is inevitable that policymakers and market regulators talk about the economic effect of the lockdown from a macro perspective. But behind all the numbers are real people who are facing real survival issues as they face a tighter lockdown. This is especially true for the micro and small businesses, the restaurant operators, food stall owners, tailors, barbers, fruit sellers, laundry operators, and countless more. People who draw income from daily demand for their goods and services. This is simply about the reality of survival, the ability to put food on the table for the family each and every day. For them, the balancing act is just a theory and holds little meaning in their quest for daily survival. Who is to say one occupation is more essential than the other? The economy is an intricate supply chain. One business relies on another and is interlinked to several others in direct or indirect ways. For the government, building back better means a revamped policy that treats hard-working Malaysians and all their families as essential at all times, not just during a crisis. All types of jobs are essential because they provide food on the table, a roof over people's head, and most importantly, a sense of purpose and dignified existence for all of us, without which individuals and families could go down a path of not just financial ruin, but also social despair. There has also been a lot of talk about FDIs lately. One of the key factors in deciding where to invest is consistency of policies. Deciding to open and close factories and offices without clear guidelines will only damage investor confidence. My point is to illustrate that policy making is managing this crisis extends beyond just the public health viewpoint. There are those who believe that a tighter MCO will save more lives. For anyone concerned about losing a loved one to COVID-19, this may seem like the only fact that matters. However, as a society, it is important for us to be clear about what exactly the outcomes and alternatives are. To me, the biggest lesson from MCO 1.0 is our acknowledgement that total lockdown and ensuring the economy survives are not and must not be mutually exclusive. Our SME sector, for example, forms the backbone of the economy, employing over 7 million Malaysians and contributing nearly 40% to the GDP. Over 70% of our SMEs posted a loss in 2020. It goes without saying that a strict lockdown will hit our SMEs, or over 900,000 businesses nationwide. Within this are small and micro businesses owners whose livelihoods are immediately affected by even a day of lockdown, what more a 14-day shutdown. This pandemic is a complex animal, requiring a combo of holistic solutions that must ensure both public health and the economy can thrive. To that end, the government has been working hard with all parties to ensure that we can win on both fronts by working on various solutions in tandem. These include, firstly, introducing MCO 2.0, which is a much improved variation of MCO 1.0. The good thing is we are now in a better, more informed situation today than we were back in March 2020. In terms of infectivity or transmission rate, we have the R0, which is closely monitored by the Health Ministry. Additionally, scientists and data experts are now looking into different modeling of data to better inform our decisions making. With data points today and analysis by the Department of Statistics, Bank Negara, and agencies like Laksana, we also have more visibility of the impact of our economic measures upon the rakyat. Today, under MCO 2.0, 5 essential sectors, which includes self-employed and smaller businesses, are allowed to operate, limiting our daily loss to 700 million ringgit. I must also add that reported COVID numbers have risen, mainly because more tests are being conducted, focusing on foreign workers at construction sites and factories. Just like government measures that have become more targeted, our testing has also been more targeted as we learn and know more about this virus on how it spreads. So we must also put these daily reported numbers of infections into perspective. But of course, more testing is what we want to ensure so that we don't have unknown clusters. Secondly, beefing up public health by procuring vaccines, having a detailed plan on national immunization, adding on more support staff, and getting the private hospitals to take on non-COVID cases. Under Budget 2021, we allocated 1 billion ringgit, but the recent PERMAI package saw an additional 3.25 billion ringgit, or 325% increase in allocation to fight COVID-19. Recently, the Ministry of Health employed over 3,500 new medical personnel to relieve pressure at the front lines. Coupled with the current MCO 2.0, these concerted efforts aim to flatten the curve and reduce community transmission to contain the pandemic. With our vaccination plan on schedule, we will soon cross the bridge between existential threats and boundless hope for better days ahead. Science has eradicated diseases like polio and smallpox through vaccination. The entire world pins its hope on being no different this time. God willing, when more than 80% or 27 million people of our population are vaccinated throughout the coming year, we hope to achieve herd immunity so we can begin to put this COVID-19 nightmare behind us. This will indeed drive our economic recovery. Thirdly, ensuring that there is no permanent scarring of the economy by 1. Helping targeted industries to maintain their capacity, for example, through the wage subsidy program, hiring incentives. And 2. Helping ease industries' cash flows issues through loan moratorium, supply chain financing, double tax deduction on workers' costs of COVID testing, rental waivers, to name a few. And 3. Providing soft loans to help businesses' working capital through the 11.58 billion ringgit disbursed that have benefited more than 24,500 SMEs through funds such as the Special Relief Facility, Automation and Digitalization Facility, All Economic Sector Facility, and Agri-Food Facility. Fourth, facilitating people and businesses to help themselves, which include job creation in a holistic manner through the National Employment Council. We are very serious in facilitating and creating 500,000 jobs this year, worth 3.7 billion ringgit. The Jana Kerja initiative will include hiring incentives as well as employment opportunities in the public sector and GLCs. Earlier, one of the short-term measures was to provide a way for workers from a troubled industry to pivot to other industries through reskilling and upskilling. For medium-term measures, we are enhancing TVET so people, especially youth, can be skilled or reskilled in 3 to 6 months and earn an income. With or without COVID, we still need plumbers, barbers, hairstylists, electricians, car and bike repairers, and gardeners. Leveraging on technology to help existing and new SMEs and micro SMEs to go digital, like the Micro SME e-commerce campaign, and then also by creating demand through programs like Shop Malaysia Online. Easing businesses and individuals' cash flow concerns through the loan moratorium, Grant Khas Prihatin, and recently the targeted moratorium, as well as specific measures for those in most affected industries, such as tourism. Fifth, ensuring social security of the most vulnerable segments of the population and the informal sector of the economy through expedited direct aids, reliefs, and improved unemployment insurance programs. And finally, tracking all these initiatives with the use of data as much as practicable. At the MOF level, Laksana tracks the implementation of measures to ensure we achieve the desired outcomes with tweaks, fine-tunes, and interventions wherever appropriate. Data must be one of the tools in government's policy-making toolkit. For example, through the use of data, we took steps to iron out the kinks and challenges in rolling out our wage subsidy program, and thus far have disbursed more than 13 billion ringgit to benefit more than 160,000 employers and 2.6 million employees. What I just listed down are the major short and medium-term strategic solutions and measures that the government has rolled out through 4 comprehensive economic stimulus packages valued at 305 billion ringgit, or approximately 20% of GDP. These economic stimulus packages are expected to have contributed up to 4 percentage points to our GDP, setting the country firmly on its recovery path with a projected growth target of 6.5% to 7.5% in 2021. This year, we have our largest ever national budget worth 322.5 billion ringgit. And now, to bridge the gap between deploying immediate support to those affected by the floods and MCO, as well as faster implementation of the Budget 2021, we have announced the 15 billion ringgit per mile assistance package. But we also realize that there are structural issues that cannot be solved overnight, that require deeper thought and consideration for longer-term planning. This is where our 12th Malaysia Plan and Budget 2022 come in. This include revamping our human capital policies to ensure we future-proof our talents, both in the public and private sectors. We must build an entire workforce of the future, which always stand ready for challenges in the digital era and for areas like agri-tech, edu-tech, mobility, and AI. Related to this is the issue of attracting local workers to jobs that have been done by foreign workers all these decades, particularly 3D jobs considered dirty, dangerous, and difficult. But if a Malaysian graduate is happy to work as a waiter at a restaurant in a neighboring country because of the higher pay, that reflects a serious underemployment issue, which could possibly be due to lower wages for graduates in this country, which could, in turn, be due to wage increase not being on par with productivity or increase in skills. It could also be due to an industry education system mismatch. Coming up with a holistic solution on this requires a longer-term planning and cooperation across various ministries and the private sector. The transition, whether to be a higher income nation or to effect a mindset and structural change in an industry, requires capacity building, which takes years to develop. One clear example is the solar panel industry. Many years ago, solar panels were extremely expensive in Malaysia. With the government policy of encouraging this industry, it is now cost-effective for businesses and homes to install solar panels that they can use to generate electricity and sell the extra power to the national grid. This involved policy making not just at the national level, but also along the value chain of the energy sector, which did not happen within 1 to 2 years. Take our agricultural industry, for example. How can we strengthen our agricultural prowess to be more cost efficient and sustainable, hence contributing to the nation's food security and reducing our reliance on food imports? Through all this, coupled with our vast natural resources, Malaysia can instead be the one supplying food to the world. A holistic relook at the economy from an ESG lens to ensure our shared prosperity vision is achieved. Budget 2021 is the first year we mapped out our budget measures to the UN's SDG goals. The 12th Malaysia Plan will provide a more holistic blueprint for this towards sustainable growth, strengthening socio-economic inclusivity, as well as better environmental sustainability. The COVID-19 and the recent floods across the country have highlighted the need to develop a more resilient economy in the longer term, and that entails investing in more updated, sustainable infrastructure and engines of growth. To this end, MOF has also started revisiting the roles and mandates of JLICs and JLCs. One clear example is how we activated the JLC Disaster Relief Network within a short period during MCO 1.0 and mobilized aid and funds to support the needy and desperate. Perhaps GLCs need to also have SDG-related KPIs apart from their quantitative KPIs. Further, for Malaysia's shared prosperity vision to be embraced by the whole economy, including the private sector, there must be matching policy decisions, firstly on socio-economic matters, like enhancing the quality of our education system, both vocational and academic, which must be matched against our policy on promoted industries or sectors, which must also be matched with our policy on diversifying the economy. Strengthen our revenue base through a multi-pronged strategy, beginning with regulating the shadow economy, which is estimated to be roughly 18% of our GDP, or approximately 300 billion ringgit in 2019. Regulating the shadow economy will also ensure that informal sector workers are protected. Additionally, we are also executing our medium-term revenue strategy, which, among others, will diversify our economy, enhance our tax framework to reduce leakages and reduce our dependency on commodity. For example, our December exports for electrical and electronic products was 5.6 billion ringgit, which, while rubber products contributed 3 billion ringgit and palm oil and palm oil-based agriculture products 2.6 billion ringgit. Surely, for rubber and palm oil, there are ways to go further downstream by enhancing and incentivizing value adding so we can capture more revenue for the country. Such efforts to require further development, particularly from the ESG viewpoint, but all this cannot be done overnight or even within a year. Next in our list of solutions requiring a longer gestation period is creating a sustainable ecosystem for entrepreneurship and innovation, ensuring ideas can be nurtured from seed, startup to full growth and beyond. We have various initiatives such as the Cradle Fund and many others. And the most recent is Penjana Capital, which is not only about empowering local startups and having private equity drive the growth of our fledgling companies, but also ensuring that foreign investors have skin in the game and follow our detailed plan to ensure knowledge transfer to build local talent in high-skilled jobs. The right startup culture helps pave the way for future brain gain, better wages for our workers, and lifting innovation to higher levels. This list that I just shared is non-exhaustive, right? I can go on with many more examples, but let me just say that from MOF's solutioning viewpoint and myself, as Finance Minister, my team and I are looking at all these ideas and more in a holistic manner. We have even started working on fresh ideas for Budget 2022, even as we roll out Budget 2021 measures. All these efforts must happen in tandem to ensure our future measures are not only strategic, but also targeted, on point, and outcome-based. Ultimately, the proof of the initiatives introduced is whether they will generate the growth that we are trying to achieve. For this year alone, people might call our GDP growth projection at 6.5 to 7.5% optimistic. For the skeptics out there, please also look at IMF and the World Bank figures. With all these measures combined, our growth forecast is very much in line with projections by agencies such as the IMF and World Bank at 7% and 6.7% respectively. In fact, IMF's projection of 7% growth expected for Malaysia in 2021 is higher than the ASEAN 5 combined, which is at 5.2%, and trailing only behind China at 8.1% and India at 11.5%. As per its latest report in January 2021, IMF is projected that Malaysia will register the third highest GDP growth among all countries globally in 2021. These promising numbers for our country are also premised on the fact that our robust growth will be supported by the competitiveness of our economy and diversity in exports. For instance, in December 2020, we recorded the highest exports of more than 95 billion ringgit. This is 10% higher from a year ago and exceeded forecasts by analysts that anticipates a 6.6% increase, as surveyed by Reuters. Moreover, it was also higher than the 4.3% growth posted in November 2020. In terms of FDI, the government acknowledges the challenging and highly competitive landscape we are facing as COVID-19 pandemic disrupts supply chains globally. To capture reshoring and relocation of MNCs, the government has introduced various tax and incentive schemes announced under Penjana and Budget 2021, as well as measures to ensure seamless facilitation of investors, such as the establishment of PACU, which is the Project Acceleration and Coordination Unit, and various online platforms such as the I-Incentive. Nevertheless, we continue to look for ways to improve our tax and investment incentives to ensure Malaysia remains competitive as an investment destination. As a result of all these measures, investors' confidence in Malaysia can be seen in terms of the approved investments during the first 9 months of 2020, which stood at 110 billion ringgit, 40% of which was FDI. These investments involve over 2,900 projects with the creation of close to 65,000 jobs. Within those numbers, we have high-end, high-technology MNCs that have set up shop or increased their investments, such as Smith & Nephew, Dexcom, Bosch, and Western Digital, to name a few. In addition to that, MIDA has also identified 240 high-profile foreign investment projects with a combined potential investment value of close to 82 billion ringgit. This includes sectors such as electrical and electronics, machinery and metal, life sciences and medical technology, chemical and advanced materials, transportation technology, and food technology and resource-based industries. These projects are anticipated to materialize this year. Moreover, approximately 48 billion ringgit worth of potential investments into the country are currently being evaluated. These projects, once approved, are expected to be implemented within the year 2021 to 2022. Our work continues by maintaining our competitiveness as a preferred investment destination, improving the ease of doing business, as well as further strengthening our institutional and governance framework. This includes formulating a national investment strategy to attract high-quality investments that can meaningfully enhance our productive capacity, create high-skilled jobs, promote technology transfer, and foster domestic linkages that will also benefit our homegrown companies. Ladies and gentlemen, fellow Malaysians, before I end, I think it's important to emphasize two important points. Firstly, you have my word that the government will do its best to protect your lives and the lives of your loved ones. We are procuring the required supply of vaccine while beefing up our healthcare system before we roll out the national immunization program. As the Minister of Finance, I'm focused on ensuring the fiscal space and discipline for all this. Keep your faith in our collective, indomitable human spirit to overcome this pandemic. Whether it is in the frontliners who are expending every ounce of energy to keep you safe, or in the noble efforts of caring Malaysians, corporates, NGOs and CSOs that complement the government's nationwide efforts. Related to this, let us not get caught up in politics and mudslinging. If you feel you cannot contribute to the positive vibes, then at least try not to add to the negative energy. Let us work together and focus on the positive and on what we can control, influence and change. Secondly, rest assured that the government has its ears to the ground and are aware of the people and businesses' survival issues. The government has played and will continue to play its role to protect lives and livelihoods. However, citizens, the private sector and NGOs must also extend their cooperation and play their role, not least by strictly adhering to the SOPs. The government cannot solve these problems by itself. I want to call upon the business and corporate community to play their part and role in reducing the spread of COVID-19 and supporting livelihoods in whatever way they can. Whether aid through corporate responsibility programs, empowerment of vendors through procurement processes, or ensuring a more equitable share in wealth and growth. Let us seek for ways to look out for each other. Let that be the hallmark of our corporate achievement. Teguh kita menang bersama. On that note, I would like to again thank Bursa Malaysia for their effort in organizing this forum. Please continue to adhere to SOPs, take good care of yourself and your loved ones, and stay safe. Thank you.
Well, thank you, YB, for that very comprehensive and very insightful address. Now, you have covered a lot of grounds, I must say, in your speech, from how the government is handling the pandemic to how the MCO 2.0 will impact the economy, to the 15 billion ringgit Prihatin package, a bit about the capital market and the overall prospects for the economy, as well as the government's commitment towards the medium-term fiscal consolidation. But if I may go back to the first part of your address, which is very much the difference between the first MCO and MCO 2.0 in terms of which sectors of the economy were allowed to be open. Perhaps you could share with us how the government would go about determining which ones to open and which ones to close?
Yep. Well, first of all, thank you for hosting this. Thank you to you and Bursa. As I mentioned earlier in the speech, you're right. The MCO 2.0 and MCO 1.0 is different because we've learned from the previous MCO that we had in March. The first obvious point that I would like to highlight here is that the MCO 2.0, more sectors are allowed to open, right, with compliance obviously to strict SOPs. And the positive thing is that when we look at the MCO 2.0, based on the essential and critical sectors, they still contribute significantly to the GDP. And of course, recently we've seen various announcements being made to also, have proactive response to the impact that we see on a daily basis as well. But we have to be mindful of what's going to happen in the future. So MCO 2.0 is a dynamic plan as well, a dynamic MCO. We have considered each sector based on their contribution to Malaysian economy, as I mentioned. But the sectors that we looked at are sectors like commodities, mining, agriculture. We now allow them to operate nearly full capacity because they are, of course, capital intensive and require less physical worker interaction as well. So I think at the end of the day, if you look at the difference between 1.0 is 2.0, the key point here is the learnings that we had in the 1.0. But we need to make sure that we have consistent policies going forward. And these new guidelines, I think, I mentioned this before, the impact to Malaysia's GDP on a daily basis is around 700 million ringgit, MCO 2.0, compared to previously at around 2.4 billion ringgit per day.
Well, that's certainly a lot less than MCO 1.0.
Yes.
But 700 billion ringgit a day is still substantial, I would say. And I guess this brings me to the next question, in the sense that many economies are not certain whether there should be a revision to the GDP forecast for 2021. So given the fact that MCO 2.0 is still in place. So I understand that the government is likely to stick to the current forecast. Perhaps your further thoughts on that?
Yeah. Yes, the current GDP forecast for Malaysia, I mean, our own forecast is around 6.5 to 7.5%. IMF also this month has given their projection for Malaysia around 7%. I think World Bank's around 6.7%. The reason why we're still maintaining that forecast despite the MCO 2.0, you know, I think we started with the CMCO and now MCO, which like Tan Sri, as you correctly stated, is around 700 million ringgit per day. It definitely have an impact to the economy. So if you ask me, I think the impact, which if the MCO continues, obviously the impact the economy is then greater, right, and the negative impact. But what's key now is to ensure that there are few areas that we need to focus on. The first one is, of course, we need to ensure that we can mitigate the impact to economy as COVID-19 challenges, COVID-19 issues start to hopefully be better, right? So we have it's really contingent upon the public health recovery, right? A strategy plan. The vaccination plan is going to be key. So we hope that if the vaccination plan is successful, this will also help the economy. And then also, when you look at the budget 2021, there are a few projections, a few assumptions that we have incorporated. I think one major one is the price of oil. The price of oil under the budget for 2021 is around, our assumption is around $42 per barrel. So now it's around $50 to $55 per barrel. The other thing that is different from this year, our projection anyway, compared to 2020, is the export. So there is export sector is showing a robust expansion with the revival of global trade. As you see, compared to last year, I think 2021, already numbers are showing, especially in December. And we've seen also that, I mean, as you know, this is still early days of 2021. And the implementation of the budget 2021 measures have just begun. It's the biggest budget, worth 322.5 billion ringgit, and it's it's just about to start, and we still have time to look if we need to revise the GDP forecast. But for now, we've done some proactive measures like the PERMAI as well, about 15 billion ringgit worth of assistance. So if we look at that, on those points, I think for now we are around 6.5 to 7.5. So we're going to maintain it. There are downside risks if we continue with the MCO on the GDP numbers, but we hope that throughout the year, as exports improve, oil price remains strong at where it is today compared to our assumption, and finally, the vaccine plan as well. The vaccine rollout is going to be key also to not just us, but also to the global economic recovery.
Well, thank you, Abi. I mean, you mentioned about the huge exports. Indeed, we are fortunate in the sense that our exports for 2020 declined by much less rate compared to the drop in import, and that has resulted in our trade surplus to be at 185 billion ringgit. Now that has been enabled by the factories continuing to operate. So indeed, I must say we fully support the decision not to fully lock down the economy, in the sense that there must be that economic activities to continue to keep things going. Now, in that respect, as much as we're talking about minimizing the impact of MCO 2.0, I think at the end of the day, the priority surely must be to accelerate vaccination, and you touched on that earlier.
Yeah.
I think it's great that government has clear plans to vaccinate 80% of the population by this time next year.
Yes.
But I'm just wondering, number one, whether that's achievable, and number two, whether we can even accelerate that, because at the end of the day, once a person has been successfully vaccinated, he or she can go about doing the normal daily life in terms of doing business, working, and keep the economy going. I wonder whether that's possible.
Yeah, if we look, I mean, of course, this my colleagues, Yang Berhormat Datuk Seri Adang, our Minister of Health, and Yang Berhormat Kari Jamaluddin, our Minister of Mosti, have been updating the National Security Council and as well as the Cabinet on the progress on a weekly basis, in fact. So, we are, for me, after receiving the brief, I'm quite optimistic that we can achieve that deadline. Whether to accelerate or not, I think it's all dependent on the rollout. We've seen in other countries there are delays, right? In US, in UK, and in Europe, not just delay in the execution, but sometimes delay in the supply as well. So there are lessons that we can learn. I believe the Prime Minister will be announcing in a greater detail the plan of the rollout. But what you've said is correct, Tan Sri. We already have we are committed in terms of allocation from the Ministry of Finance anyway to procure about 80% of vaccination for the Malaysian public. We've signed with obviously Pfizer, AstraZeneca, and of course we were one of the first also to join the COVAX a couple of months ago. So so this, I think the one that's confirmed is already about 50% of the will inoculate about 50% of the population. We are also, from the brief that was given to us by the relevant ministers, we are, we are already in negotiation with other producers. All right, so we quite depends on the supply and also the execution. And I think if it goes well, I hope, of course, personally, I hope we can accelerate that as well. For now, the timeline that were given to us by the two ministries, whether the joint committee, is latest by first quarter 2022, and receiving in February, so hopefully roll out March.
Right, indeed, we are very hopeful that that can be accelerated. Yeah. Now, if I may move on to budget 2021. Now, you mentioned earlier that there have been a number of initiatives that already started being implemented, and indeed you mentioned they need to focus on execution. So perhaps you can elaborate more about that. Thank you.
Yeah. So I think what we've decided, the government has decided, is to accelerate some of the initiatives, also improve some of the initiatives, and also add new initiatives that can help the people and the businesses, especially in these challenging times. For example, the BPN 2.0 we have paid, that's about 2.38 billion ringgit. So we have expedited the payment to this is around 11.06 million Malaysians, and then this BPR, the Bantuan Prihatin Rakyat, the first phase is around 2.12 billion ringgit. It's actually supposed to be in May. Now we brought it forward also to February or end of February this year. Maybe I want to take this opportunity to tell all Malaysians that those that qualify, the new application process for the BPR has commenced, and it ends until 15 February. So please do register. And then the wage subsidy program as well. I think under PERMAI we improved it from what we announced in the budget 2021. So, when during the budget we focus on the sectors that was most affected, especially the retail and also the tourism. But because of PERMAI MCO 2.0, nearly most sectors are now more sectors are affected. So we've enlarged that, and we've increased also the total amount that's for this program subsidy upah, or the wage subsidy program. So this is now, we put on top of the 1.5 billion ringgit announced in budget 2021, we add another 1.5. So in total, the subsidy program that we have announced, wage subsidy program that we announced in 2020 and 2021 is close to 20.7 billion ringgit in total.
Well, thank you. I mean, those initiatives would clearly result in a lot more spending by the government. But I think a lot of people are comforted by the commitment that the fiscal deficit for 2021 will be kept within 5.4% of GDP. And that has obviously attracted the attention of the rating agencies. That brings me to the next question. Now, last Thursday, 28th January, I think we had the good news that Moody's had reaffirmed our credit rating at A3 and with a stable outlook. Now, of course, we all know that rating agencies, among others, they'll be looking at the government's commitment towards medium-term fiscal consolidation, looking at the government borrowing. And I think you have mentioned that the government will be very disciplined in terms of the debt level and so on. Maybe we could elaborate a bit more on that. Thanks.
Yeah. So as I mentioned just now, I think the focus for this year is to ensure the rollout of the budget. That's about 322.5 billion ringgit. Even the PERMAI, we have accelerated some, we improved some, but we're still within that 322.5 billion budget. One of the reasons why we can do that is because it's still early in the year. So we can repurpose some of the allocation to ensure that we prioritize that now. And obviously, to a later part of the year, it's going to be a bit more difficult to do that. So if we look at the budget deficit, you're right, Tan Sri, we are maintaining that number around 5.4% for 2021. We have also committed to a debt ceiling ratio, the debt to GDP statutory limit around 60%. We will probably end around 58 to 59% based on that deficit. But having said that, we have to adjust as depending on how the economy is the next couple of months, because we've seen in 2020 as well, the budget was around 3.2 to 3.4%. In the end, I think based on the forecast that we have for 2020, we probably end around 6.0 or 6.1%, so nearly double what we forecasted. But of course, what's important to the rating agencies and what's important for us is to ensure that whatever we spend is also helping the economy and not gone to waste. So I think we are not alone. Other countries are doing the same thing. So I think the rating agencies are focusing on where the money is going, not so much anymore just on the fiscal capacity of the government of Malaysia or any economies for that matter.
Well, again, thank you for that clarification. Yeah, indeed, I think it is important for our credit rating to be as good as possible, and A3 is good.
Yes.
And as you know, many corporates will have their debt level or their cost of borrowings tied to the sovereign credit rating. Now, speaking of corporates, thank you for spending a fair bit of time to talk about the capital markets in your speech earlier. So indeed, Alhamdulillah, last year was a good year for Bursa Malaysia, where our benchmark index, the composite index, improved by 2.4%, and one of the best performing markets, I suppose.
Yes.
And we've seen tremendous growth in volume, as you demonstrated, double to 4.2 billion ringgit per day, the average daily trading value. Now, as we move forward, I think a lot of people are also talking about the foreign investors level in the market. Again, you touched a bit on that. And we've seen, although 24.6 billion ringgit of outflows from among the foreign investors, but this has been very well absorbed by the domestic institutional and domestic retail investors. And that's actually on the equity side. But on the bond market side, we have seen a net inflow of 18.3 billion ringgit.
Yes.
So I guess that's comforting to note. Whether you like to make further comments on that?
Yes, I mean, well done on the performance on the stock market. I think Bursa Malaysia played a role in this, where we've seen, like you said, a record. I was a stockbroker before. I don't think we've seen that numbers for at least a decade, right, in terms of average trading volume per day. In terms of what Tan Sri you mentioned about the non-resident equity outflow, when you look at that compared to the bond market, equity market, and bond market, if we put things into context, I think you know this, Tan Sri. If we look at it's happened not just to Malaysia but all over the world, right? All the countries all over the world, when they entered into this lockdown, they had a so-called exit of equity outflow. And in fact, most countries, when I spoke to some of the fund managers, they took out the money, right? You can see that many countries experienced that significant outflows, and as well as actually, when you look at that, there's also downward pressures to the not just to the bond market, there's also the currency markets, right? And for Malaysia, we've seen that in the equity markets, but again. If you look at the data that I saw before our meeting just now, that is from Bloomberg, South Korea, Thailand, Indonesia, Philippines, this is all the countries also saw an equity outflow when it comes to the equity markets. For the bond market, I think you're right. I think one of the main reasons for that is probably because investors are searching for yield. Central bank all over the world have cut their policy rates. Malaysia is one of them, but if you look at relatively, we still had the room to play when it comes to monetary policy, and it's evident by what Aziz said, I think around 18 billion of net inflow into the bond market. So I think that played a role as well for the net inflow. But whatever it is, it shows to me, it shows the confidence of the capital market on some of the policies and the direction that we are heading. They are always the leading indicator of what they think the economy would be for this coming months.
Well, thank you. Now, obviously, whenever we talk about the foreign investors, I always believe that the portfolio fund managers will always look at funds into markets where they think they can make money. And naturally, as we move into 2021 and beyond, what drives the stock market performance will surely be the underlying performance of the listed issuers, the corporates, if like. And that brings me to perhaps the last question, YB.
Yes,
in terms of the Malaysian corporate sector. Now, both of us were fortunate to have been part of the transformation of government-linked companies from 2004 until 2015. And over that 11 years period, we've seen how the performance of the GLCs have improved and how they've improved also in terms of their governance and enhanced role in nation building.
Yes.
Now, in terms of financial performance, I think the profit growth was something like 10.2% per annum, and in terms of total shareholder returns, 11% per annum.
Yes.
So I think that's great. So I'm just wondering whether the time has come for a transformation of public listed companies to be implemented, and perhaps with that, what are your hopes and aspirations for the Malaysian corporate sector?
Thank you. Well, you saved the hardest question last. But I can't agree with you more. I think during your time, especially leading many GLCs, you saw how difficult it is. But when with the right support from the shareholders and from the board, and the right execution, we can transform companies, right, and contribute more. And to me, of course, today, in my speech also, I did mention about GLC also now stepping up because they have that foundation already built. So now we need to look at how they can expand that by supporting their role as a nation builder as well. So now it's also important to see what the private sector themselves can help. So to me, there are three things that I think the corporates can do. Firstly, you need to embrace ESG. I think Bursa Malaysia is one of the big proponents to that, because we want companies to be sustainable, right? I think embracing ESG will allow Malaysian corporates to be more sustainable. Secondly, I think Malaysian corporates, we need to admit that to grow to be a national champion is, many of the corporates today, the private sector, have been quite successful at that, and you've led many of these companies, but you also led before a company that's want to be an ASEAN champion. I mean, Maybank is being one. So I think this big private sector that's listed on the stock exchange must have the ambition to put Malaysia, although as the home destination, as the home country, but to expand out of Malaysia. I think we need to see that more happening. And the third one, I think where the private sector can really help is on human capital. I think investments into the right technology, value add technology will help, help people to get this right support from the government to invest in this right technology, but also to equip them to train people and ensure that our Malaysians are, gunning for this kind of jobs where at the end of the day will be better, better paid, and of course ensuring that their livelihoods are better. But I think human capital is key, because at the end of the day we want to move towards the fourth industrial revolution as a country, and the corporates have a role to play in assisting that as well. So I think those are the three key areas where the private sector, especially those large companies that are listed on the stock exchange, can help as part of the nation building.
Well, thank you, YB Tengku, for being very candid when answering all the questions posed to you.
Thank you.
Indeed, we are truly grateful, and we wish you all the best. Thank you. Though uncertainties will continue to linger in global and domestic markets this year, I'm sure that with all the measures YB Tengku has outlined and clarified, we will be able to overcome these economic challenges in time. With proper and timely execution by all relevant parties, I'm sure that we will be able to ride out the challenges we are currently facing and see our economy turn around and recover. Only by working together can we forge ahead during the most challenging of times. Thank you to our audience for participating in this special session. Let us all do our respective part, be constructive, and embrace the spirit and intention of Rukun Negara. Stay safe and healthy. Sekian, wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Terima kasih.